Dear shareholders, today the A-share market is truly a tale of two extremes. The main index is struggling underwater, but there's one sector that's defying the trend and soaring, with all stocks in the green. That's right, I'm talking about rare earths. And at the center of this storm is China rare earth, which is what we're going to talk about today. So how did this fire get started? Let's rewind to a few days ago. On April 9th, we dropped a bombshell, further strengthening export controls on key metals gallium and germanium. Before the news had even settled, two giants in the rare earth industry, Northern Rare Earth and Baotou, immediately announced an increase in the related transaction prices for rare earths and gold ore for the fourth quarter. This series of combined moves had an immediate and powerful effect. Just imagine, on one hand, strategic resources are being tightened more and more, and on the other, leading enterprises are directly raising prices. How strong is the signal this sends? So today, the entire rare earth sector reacted swiftly, with multiple stocks hitting their upper trading limits. The rare earth permanent magnet sector index hit a 15-year high, and as the flagship player in the industry, China rare earth naturally took the lead. Why can rare earths become our trump card at the negotiating table? First, they are the lifeblood of industry. From your mobile phone to new energy vehicles on the road to airplanes in the sky and advanced weaponry, all rely on them. Especially in the robotics industry, using rare earth permanent magnet motors can double performance. Second, we have absolute say in the matter. Not only do we have large reserves accounting for nearly half of the world's total, but more importantly, we control over 90% of the global rare earth refining and separation capacity. What does this mean? It's like other countries may have the mines, but after the ore is extracted, it has to be sent to us for processing before it can become useful material. And this technological barrier, combined with the cost advantage of low electricity prices in places like Inner Mongolia and Sichuan, forms a deep moat for us. So when strict export controls are implemented at the policy level, elevating rare earths from an ordinary resource to the status of a national strategic material, the entire industry's valuation logic changes. In the past, it was just about selling raw earth, but now the focus is on the added value of high-tech materials. The expectation of both rising volume and price is written all over their faces. Returning to China rare earth, formerly known as Minmetals Rare Earth, after its integration and renaming, it inherently reflects the national strategy of specialized consolidation of medium and heavy rare earth resources. You can think of it as the special forces within the national rare earth team, focusing on the higher value medium and heavy rare earths. Looking at its valuation with today's limit up, the price to earnings ratio is close to 200 times. This figure is indeed quite high, and what it reflects is the market's extremely high expectations for the industry's prosperity and the company's future earnings growth. This is a typical logic of pricing the present based on future growth potential. Whether these high expectations can be realized by future performance is a core issue that all investors need to keep tracking. Overall, the limit up of China rare earth is the result of the combined effect of favorable policies, industry price hikes, and market sentiment. It is driven not only by short-term events, but also supported by long-term macro, strategic, and industrial advantages. From the trading perspective, the surge in volume and limit up shows extremely high market enthusiasm. But technical indicators also suggest that short-term sentiment is overheated. From a fundamentals perspective, the company is in a prime sector with a prominent strategic position, but the high valuation also means that the market has already priced in a lot of optimism. How will the story of rare earths unfold in the future? Will it continue to surge ahead, or will it enter a phase of volatility and divergence? This depends on changes in global supply and demand, the strength of policy implementation, and the development speed of downstream high-tech industries. Today, this grand game has only taken a crucial step. For ordinary investors, when facing such a popular target, it is even more important to remain calm and rational, and to deeply understand the underlying driving factors and potential risks.